Hello and welcome to the Dinar Daily. We are tracking a significant story that has emerged in financial circles, one that moves away from the usual channels of rumor and speculation. The focus of this development is a report concerning what is being described as a leaked internal memorandum from Chase Bank, one of the largest financial institutions in the United States. This alleged document has captured widespread attention because it purportedly contains internal directives related to the Iraqi dinar. For a long time, discussions around this particular currency have been confined to speculative forums, but the emergence of this alleged internal banking communication is being interpreted by many observers as a notable shift in the narrative. The information is not coming from an anonymous source, but reportedly from within the operational structure of the bank itself, leading to intense analysis of its potential implications. The story, as it has been related, began as a seemingly routine internal communication originating from a Chase Bank regional office. This communication was not intended for public dissemination. Rather, it was directed to a specific group of employees, including branch managers and staff involved with currency operations. The quiet distribution of this document is what makes its subsequent leak so significant to those who follow these topics. The memo's journey from a private internal advisory to a public piece of evidence is central to the current discussion. It represents a potential crack in the wall of silence that many observers believe has surrounded institutional handling of this currency, suggesting that internal preparations may be underway. Separate from any public-facing policies or statements what immediately set off alarms, according to the analysis of the transcript, was the document's alleged subject line: upcoming adjustments, foreign currency revaluation monitoring. Those 6 words, in that specific combination, have been seized upon by financial analysts and longtime market watchers. The interpretation offered is that this precise terminology is not casual. Instead, it is claimed to be specialized language used within banking operations, particularly when internal systems are being prepared for significant shifts in international exchange rates. The term revaluation monitoring specifically has been highlighted as a phrase that signals a proactive, rather than a reactive, stance. It implies that the bank is not just observing market chatter, but is actively setting up its systems to track and manage an anticipated event, which is a critical distinction in operational procedure. The analysis of the transcript further deconstructs the gravity of this reported subject line. The word upcoming suggests a future event that is known and being prepared for, while adjustments is a neutral term for what could be a significant change in value. However, the combination with foreign currency revaluation is what analysts claim is the most direct language possible. Monitoring completes the picture, indicating that the bank's internal mechanisms are being directed to watch for specific data feeds to go live. This interpretation posits that such a directive would only be issued if the bank had received credible, high-level information that a change was no longer a distant possibility, but had entered a phase of technical implementation, requiring the bank's own software and staff to be ready for a new set of data. The most critical detail reported in this leaked memo, and the one that has caused the most significant reaction, is the specific inclusion of the Iraqi dinar. According to the report, the document did not just speak in general terms about foreign currencies, but explicitly listed the IQD by name. This is a crucial element of the story, as it would be the first of its kind from such a high-level U.S. financial institution. The Iraqi dinar, which has long been a subject of intense retail speculation, has rarely, if ever, been named in official, public-facing banking documents in this context. Its reported presence in an internal-facing operational memo is therefore seen as a major development by those who have tracked the currency's status. Furthermore, the transcript of the news report makes a very specific point about how the Iraqi dinar was listed. It was allegedly not just included in a list but was formatted in bold text. In the context of a dry corporate memo, such typographical emphasis is interpreted as a deliberate instruction to draw the staff's immediate and primary attention to that specific item. Analysts suggest this bolding implies that while other currencies might be under general monitoring, the IQD is a priority or is subject to a unique or more imminent change. This detail, if true, would separate the Iraqi dinar from any other routine currency fluctuations, marking it as a special case that requires immediate preparation and heightened awareness from the bank's currency staff. The memo then reportedly used another technical phrase that has been heavily analyzed. It instructed staff to monitor the currency for upcoming changes in exchange rate visibility. In simple terms, as broken down by the report, this directive is not about the currency's value itself, but about its status within the bank's internal systems. Rate visibility refers to whether an exchange rate is displayed on the screens used by tellers and currency traders. Instructing staff to monitor for changes in that visibility implies that a currency that is currently not visible or is listed at a placeholder rate is being prepared to show a new, live and tradable rate. This is seen as a preparatory step before a currency is made accessible for public exchange. The report's interpretation of exchange rate visibility is that it is a fundamental technical step. Banks like Chase, which operate on a global scale, do not simply type new numbers into a computer. Their systems are interconnected with global financial data feeds. An instruction to prepare for visibility changes would mean that the bank's IT and currency departments are being told to ensure their back-end systems are correctly configured to receive, process, and display new rate data that they expect to receive from upstream sources. This is not a hypothetical exercise. It is an operational drill to ensure that when the new data feed is activated, the bank's internal display systems do not fail and are ready to conduct transactions. This alleged directive is being framed as a complete reversal of the long-standing posture of many large U.S. financial institutions. For years, individuals inquiring about the Iraqi dinar at bank branches were reportedly met with consistent responses that the currency was not listed, that it was not tradable, or that the bank had no official position on it. This general silence led many to believe that the dinar was permanently considered an exotic or non-tradable asset by the mainstream financial system. The reported memo, by explicitly naming the IQD and preparing staff for its visibility, would directly contradict that long-held institutional silence. It would mark a significant pivot from a policy of non-acknowledgement to one of active preparation. This shift from being an outsider currency to one that is being actively tracked is, according to the analysis, a monumental step. It suggests that the currency is being moved from a category of speculative assets, which banks typically avoid, into the category of legitimate monitored foreign currencies. This is the core of the report's argument, that the conversation inside the bank has fundamentally changed. The memo, if authentic, would serve as documented evidence that the Iraqi dinar is no longer being treated as a fringe topic. Instead, it is being integrated into the bank's operational workflow, a process that requires technical calibration, staff training, and compliance checks. This preparation, the report argues, would not be undertaken lightly. Adding to the gravity of the report is the memo's alleged inclusion of a strict confidentiality clause. The document reportedly stated that all internal rate visibility updates were to be treated as confidential and restricted. Staff were explicitly instructed not to discuss or share any of these potential updates with the public until a formal corporate approval was granted. This instruction, according to the analysis, is a key piece of evidence confirming the sensitivity of the information. It implies that the bank is aware of the significant market impact such news could have and is attempting to manage the flow of information tightly. This is not a routine update. It is a high-stakes preparation for a non-public event. The interpretation of this confidentiality clause is that it validates the memo's authenticity and importance. It was not meant for public consumption. It was an internal heads-up designed to prepare employees for the moment the switch flips, so they would be ready to handle customer inquiries and transactions once new rates were officially made public. The report likens this to a soft launch, an internal readiness check before a major product reveal. The very fact that staff were warned not to talk about it is seen as confirmation that there is, In fact, something significant to talk about. This instruction underscores the internal belief that a public announcement is forthcoming, and the bank was positioning its staff to be ready for that moment. The report also advances a specific line of reasoning. Banks do not expend valuable resources, time, and training on hypothetical scenarios. Every internal memo, every system calibration, and every staff directive costs money and operational bandwidth. Therefore, the argument goes, if Chase is instructing its systems to be calibrated for new IQD rate adjustments, it must be because rate data has already begun to flow into their backend servers. This is not a test for a what-if scenario. It is a preparation step for a real-world event. In plain English, the analysis suggests that the bank is getting ready for something real, because its own internal systems are already detecting the preliminary data signals. This leads to the next major point in the report: the timing of the leak. This alleged memo did not appear in a vacuum. Its emergence is described as perfectly timed because it coincides with a series of major, verifiable economic reforms happening within Iraq itself. Over the past several weeks and months, the Central Bank of Iraq and the Iraqi Ministry of Finance have been rolling out significant reforms. These include the finalization of the 2025 budget, the widespread implementation of digital payment systems across the country, and the testing of new frameworks that would allow for international trade to be conducted using the Iraqi Dinar rather than the US dollar. These domestic reforms within Iraq are presented as the foundational steps every country must complete before it can allow its currency to adjust or float on the global market. They are the necessary precursors to any change in valuation. The report highlights a specific phrase reportedly used by Iraqi officials: exchange rate unification. This technical term is described as historically significant. It is the formal process of eliminating multiple different exchange rates, such as an official rate, a market rate, and a trade rate, and bringing them all into alignment as one single unified national rate. This is a critical step for synchronizing a domestic currency with global financial systems. The report then connects these two parallel narratives. On one side, you have Iraq's government and central bank announcing the final stages of exchange rate unification, a technical prerequisite for a global rate change. On the other side, you have an alleged internal memo from a major U.S. bank, Chase, instructing its staff to monitor that exact currency for upcoming adjustments and rate visibility changes. The analysis presents this as two sides of the same story unfolding simultaneously. It suggests that the internal preparations within Iraq are now being mirrored by the external preparations within the international banking system, which is a powerful and new development. This brings the discussion to another recent phenomenon: the mysterious test rates that some observers reported seeing on foreign exchange monitors in previous weeks. These included placeholder numbers such as the IQD appearing at approximately $5.03 and the Vietnamese dong VND near $3.95 at the time. These were widely dismissed as data glitches, common placeholders, or simple testing errors. However, the report suggests that in the new context of the leaked Chase memo, these glitches are being re-evaluated. They may not have been random errors at all, but rather the first visible signs of these internal rate visibility trials being conducted. This reinterpretation of the test rates is a key part of the report. The argument is that banks, before rolling out a new global rate, must test their systems. They feed test numbers through their internal networks to ensure that the software, from the back-end servers to the teller screen, can handle the new data structure and values. Those brief glitches, seen by the public, may have been the external footprint of these internal tests. The leaked memo, with its instruction to monitor for rate visibility, is now seen as the internal directive that corresponds to those external test numbers, lending them a new layer of potential significance. For those who have followed this topic for many years, the report frames this as the most concrete development to date. The conversation, it argues, has fundamentally shifted. It is no longer about speculation, rumors, or anonymous online gurus. Instead, the focus is now on what is described as a documented internal banking process. The analysis is clear: you cannot fake a memo that includes highly specific technical language, operational exchange monitoring instructions, and precise confidentiality clauses. This is not gossip. It is the language of corporate operations. The significance is not just the content of the memo, but that the entire discussion has moved from public forums to the heart of the U.S. banking system. The report also emphasizes the specific role of Chase Bank. Chase is not just any commercial bank. It is identified as one of the U.S. Treasury's largest and most important settlement partners for cross-border foreign exchange. This means they are at the center of international currency flows and work in direct coordination with global regulatory systems. The analysis suggests that an instruction for Chase to begin monitoring a currency like the dinar would not originate from a low-level manager. Such a directive would almost certainly come from a higher authority, filtered down through coordinated channels involving the U.S. Treasury, the International Monetary Fund, IMF, or the Central Bank of Iraq, CBI. This chain of command argument is used to support the legitimacy of the alleged memo. A bank of Chase's stature, with its deep integration into the federal and global financial architecture, would not unilaterally decide to start tracking the Iraqi dinar for a revaluation. It would only do so, the report claims, if it were part of a coordinated, pre-planned signal from the very top of the global financial leadership. This context elevates the memo from a simple internal update to a potential sign of a synchronized and officially sanctioned international financial operation, making its implications far more significant. As if to reinforce this point, the report continues by stating that after the initial memo's contents became known, insiders from other major U.S. banks, specifically naming Wells Fargo and Bank of America, quietly confirmed that they had received similar internal updates. According to these claims, these other banks also saw updates to their internal currency feeds, with placeholders appearing for revaluation monitoring and the IQD being explicitly listed. This suggests the communication was not isolated to just one institution. The implication of this alleged corroboration is profound. If multiple, separate, top-tier U.S. banks are all running the same internal procedures, monitoring the same currency, and using the same technical language at the same time, it is, as the report describes, not a coincidence. It would be a synchronized operation. This kind of coordination across competing financial institutions only happens when a directive is issued from a central authority that governs the entire system. It implies that the global systems are being brought into alignment in preparation for a unified activation. This, of course, leads to the primary question on everyone's mind: the timing. The report is careful to state that no one outside of the closed central banking network knows the exact date or hour for any public-facing change. However, it does offer an analysis based on historical precedent. When internal bank memos of this nature, those that instruct staff to actively monitor live rate feeds, surface, it typically means the back-end approval process is nearly complete. Historically, such internal preparations have been observed to surface only weeks, or in some cases even just days, before an official public update is made. The report then circles back to the potential rates themselves, specifically the test numbers that were seen, an IQD around $5.03 and a VND near $3.95. It analyzes what these numbers, if they were to be accurate, would signify. A revaluation to such a level would, according to the analysis, instantly place the Iraqi dinar among the strongest currencies in the entire Middle East. This value would be a reflection of the country's immense oil revenues, its recent financial restructuring, and its strategic push toward economic independence. For those who have followed this, the report notes, it would represent one of the most significant currency reevaluations in modern history. However, the report immediately follows this analysis with a strong and crucial note of caution. Regardless of how exciting these developments may appear, patience and prudence are paramount. It stresses that when or if the time comes for new rates to appear, the process will be handled through official, verified, and regulated channels. These changes will appear on the screens of legitimate, regulated financial institutions. The report explicitly warns against private exchanges, social media offers, and any third-party deals, which are common tactics used by scammers. This warning about fraudulent activity is a significant theme. The report notes that scammers inevitably appear at moments of high anticipation, pretending to offer early access or secret exchange rates to trick people. The advice provided is to ignore this noise completely. The real update, it states, will be unmistakable and public. It will come directly through the established banking system, and only after the corporate confidentiality restrictions, like the one mentioned in the Chase memo, are officially lifted. Until then, the only correct action is to wait for that official, public verification. In conclusion, the report presents this alleged Chase Bank memo as a pivotal moment. It marks a point where years of speculation, doubt, and disbelief have finally intersected with a tangible, documented piece of internal institutional acknowledgement. The narrative has shifted from if to when in the minds of many based on this new information. The core takeaway from the report is that the writing is now on the wall, not from online forums but from within the banks themselves. The claim is that banks are preparing, Iraq is ready, and the international framework is aligning. With all three components moving in sync for the first time, the final analysis offered is that the smartest move is not to chase rumors, but to be prepared for an official announcement. The banks, according to this report, are preparing quietly because they operate on confirmed information, not on public noise. The proof is no longer in whispers but in what is claimed to be official internal documentation. The revaluation, the report concludes, is no longer just talk. It is in motion, and the banks themselves are now showing their cards. This is the situation as it has been reported. Based on the analysis of this alleged internal document, we will, of course, continue to track every development and update related to this story as it unfolds. Stay informed, stay focused, and stay ready.